What's up you guys, Sasha here. Nobody's talking about it. I'm not seeing anybody discuss it in the news. I'm not seeing anybody talk about it in video. I'm not seeing anybody discuss it in any kind of big forum. The credit crunch is here. It is not on the way. It is not coming at some point in the future. The credit crunch for 2020 has already arrived and it's looking to be far crunchier and far bigger than people expect. Let's talk about it. The government is still doing its job in trying to infuse the public with positive vibes and talking up the economy, talking up the forecast and where they think the country is going to go. They keep talking about the V-shaped recovery. They keep talking about people going back to work. Today the news has come out that the government is saying that everyone should get back on the public transport and everyone should begin going to their places of work to try to get the economy going. Boris Johnson is openly out there telling everybody that everything's fine, everything's going to be absolutely okay by the time Christmas arrives. We've had a mini budget, which is trying to stimulate the recovery through house buying and selling by removing stamp duty from the vast majority of purchases. And yet, things are just not what people are saying they are. First, let's talk about mortgages. The government is incredibly keen for the economy to get going and they've made this a focal point of their agenda. They're trying to get people to buy and sell, they're trying to get people to move so that they can be more productive, so that they can go and take up jobs where there are jobs. But the problem is, how are people actually going to buy these houses? The statistics are absolutely incredible. There were something like 400 mortgages available at the beginning of the year for people who had a 5% deposit and wanted to borrow for a 95% loan to value mortgage. Today that number is about 10, I think actually slightly less than 10, and by the time you finished watching this video, it's probably going to be 0. These mortgages basically don't exist anymore. In order to qualify for the few ones that do exist, you have to jump through so many hoops other than actually finding them in the first place that you probably will never get accepted. In fact, even if you're looking at slightly higher deposit values, the picture still looks super bleak. Only 10% of the mortgages for 90% loan to value that were available before the crisis are still available. That is an incredibly low number. Many house buyers require a deposit of at least 15% in order to be able to buy a property, and with many providers that number is as high as 30 or 40% before you can even hope of getting accepted. The average rates that are being charged on mortgages are creeping up slightly to offset the increased risk and market volatility, and with fewer and fewer people being accepted, the likelihood is that this is not going to result in any kind of quick rebound. The credit card market has dried up significantly. I was recently doing some videos where I went and looked at the credit cards that I was talking about, and by the time I came to film and edit the video a day or two later, those credit cards already didn't exist. In fact, when I was looking at the market just before filming this video, it was apparent that something like 60 to 70% of the products that were available are no longer available to new customers. The credit cards that you can get come with massive restrictions, and the problem is that a bunch of these restrictions are not public. You won't know about them until you go and apply. The credit policies and scores required in order to be able to get these cards are going to be significantly harsher than they were previously. The economic outlook is bleak, the jobs outlook is bleak, the likelihood of the economy going into a big recession is high, and so credit card companies are tightening up. That means acceptance rates are going to be considerably lower than they used to be, and that means that although there are products in the market, they're only picking the very lowest risk customers, and the customers that previously would have been accepted for these cards no longer will. Other providers like RBS or First Direct are only allowing existing customers to be able to apply for their credit cards, and the reason for this is when they're making those decisions, they're then able to go and look at your current account, your performance over many years with the bank, the loans and credit cards you previously have held up with the bank, the bureau data that they get every single month by virtue of you having a bank account with them, and make an incredibly more detailed decision than they would be for somebody who they don't have a banking relationship with. Even banks that don't have so many customers are coming up with quite interesting ways of achieving the same benefit. Sainsbury's Bank will only offer you a credit card if you are already a Nectar card holder, and that means that they can go and look at the data from your Nectar card to try to make a slightly more in-depth decision. What kind of things do you buy with your Nectar cards? How much do you spend? What is your level of disposable income? All of these kind of things that they can glean from that data on top of the information you provide in the application form is necessary for them them to make the right decision. So again, a lot of people are going to be either excluded outright if they're not a Nectar card holder, or if they are, that data can likely work against you as much as it can help you. In fact, it probably will work against you more, otherwise why would the restriction be in place in the first place? There are still some 0% balance transfer credit cards out there. Some of them go as high as 28 months, which is incredible because I would wager that in a month or two, even these deals are going to be going. But the problem is, I would wager that the acceptance criteria for them are incredibly tight. So good luck if you're going to try and apply. If you did get one of these cards, make sure you leave a comment below. It'd be interesting to hear from people who are being accepted. The biggest problem is that the credit crunch is already here. The vast majority of common mainstream lending products have already left the market, and we haven't even approached the worst part of this downturn yet. Currently, people are still being supported by the furlough scheme. Now, the furlough scheme does run until the end of October, but at the end of July, so at the end of this month, in just 2 weeks or thereabouts, people are going to begin finding that the furlough scheme is not quite what it was before. From August onwards, employers have to actually make contributions towards the payments, and they're not going to get 100% of the entire cost of the wages plus the taxes. So suddenly a lot of companies are going to have to make very tough decisions. Companies that are still not able to operate fully or at all in some cases will have to make very hard decisions. Do they keep people on furlough and essentially pay them a portion of their salary, or do they go and get rid of people? Do they close their businesses down? Do they continue operating? All of these questions are going to be answered in the next few weeks. At the end of October, the furlough scheme ends full stop, and at that point there is absolutely no support. So if your business is not running at full speed, if you were previously on tight margins and a 10 or 20 or a 50% decrease in customer traffic is going to make your business unprofitable, those businesses are just not going to be able to survive. And what is that going to mean for people's ability to earn wages, for people's ability to repay credit, and for the qualifying criteria that the credit card company is going to set as a result of this? In early June, I released a video about the upcoming redundancies. It seems like a lifetime ago, but back then it seemed like a crazy thing to be saying, and yet today, every single day, big companies are announcing tens of thousands of redundancies, and this has become a reality. In the current economic climate, who is going to be buying a new house, buying a new car, refurbishing their kitchen, or borrowing money to go on a holiday to Florida? I mean, the number of people who are looking for credit is decreasing sharply, and therefore that's going to drive a reduction in the supply of credit as well. We now live in a world where even people who had relatively stable and certain jobs before are suddenly at risk of losing them. Suddenly the stability of people's income is in question. So as the next few months progress, it's going to become more and more difficult to be able to qualify for credit. The credit might be out there, but fewer and fewer people are actually going to be able to meet the minimum criteria that the lending companies will actually set. Now, it's a relatively short video today. I just wanted to talk about the situation as it is. People are just not talking about the credit crunch. Maybe this video is not going to be shown for whatever reasons because of that. I don't really care. I just wanted to mention it because it is an important factor, and it's going to shape the way that the economy is going to go in the next few months and the way people's lives are going to be affected. Stay safe. Don't think that you can rely on credit to be able to get you through things. If you do need credit for whatever reason, and you are definitely going to be applying for it in the next few months, maybe you want to consider applying for it sooner rather than later, because it might be that much more difficult to get it at the point when you actually want to draw the money down. If you don't need credit, just be wary when you're making financial decisions that getting credit in the future might be more difficult. If you have a credit card that has a balance, it might be considerably more difficult to move it to a 0% balance transfer credit card, so try to plan ahead for what exactly you're going to do with it when your 0% period runs out. In the next video, I'm going to do a slightly more upbeat and positive topic. We're going to be doing a big review, so make sure you subscribe to this channel and hit the bell so you get notifications when that video comes out, because straight after the big review that's coming next, there's going to be lots of small individual reviews of challenger banks and various different cool fintech products. So look out for that. I'll see you guys later.